Good afternoon, everyone, and welcome
Hi
to Tesla's
everyone,
second quarter
this is
2024
live. Let's
earnings
take a look
webcast.
what's going on
My
with
name is Travis
Tesla.
Axelrod,
Out of
Head
a
of Investor
Tesla.
Relations, and I'm joined today by Elon Musk, Vaibhav Taneja, and a number of other executives. Our Q2 results were announced at about 3 p.m. Central Time in the update deck we published at the same link as this webcast. During this call, we will discuss our business outlook and make forward-looking statements. These comments are based on our predictions and expectations as of today. Actual events or results could differ materially due to a number of risks and uncertainties, including those mentioned in our most recent filings with the SEC. During the question and answer portion of today's call, please limit yourself to one question and one follow-up. Please use the raise hand button to join the question queue. Before we jump into Q&A, Elon has some opening remarks. Elon?
Go
Thank
Elon.
you. So to recap, we saw large adoption acceleration in EVs, and then a bit of a hangover as others struggle to make compelling EVs. So there have been quite a few competing electric vehicles that have entered the market, and mostly they have not done well, but they have discounted their EVs very substantially, which has made it a bit more difficult for Tesla. We don't see this as a long-term issue, but really as fairly short-term. We still obviously firmly believe that EVs are best for customers and that the world is headed for a fully electrified transport, not just of cars, but also of aircraft and boats. Despite many challenges, the Tesla team did a great job executing, and we did achieve record quarterly revenues.
Okay, record
Energy
quarterly
storage
revenue.
deployments reached an all-time high in Q2, leading to record profits for the energy business. And we're investing in many future projects, including AI training and
AI.
inference, and a great deal of infrastructure to support future products. We won't get too much into the product roadmap here because that is reserved for product announcement events. But we are on track to deliver a more affordable model in the first half of next year.
Affordable model, that's good.
Really, by far the biggest differentiator for Tesla is autonomy. In addition to that, we have scale economies, and I think we're the most efficient.
This is where they want to do the automatic autonomy cars.
While others are pursuing different parts of the AI robotic stack, we're pursuing all of them. This allows for better cost control, more scale, quicker time to market, and a superior product.
I mean, he's not the greatest talker in the world, but basically he's doing lots of things with trucks as well, autonomy trucks, which is good.
Humanoid robots like Optimus. Regarding full self-driving and robotaxi, we've made a lot of progress with full self-driving in Q2, and with version 12.5 beginning rollout, we think customers will experience a step change improvement in
Robotaxi.
how well
That's the future.
full self-driving works. Version 12.5 has 5 times the parameters of 12.4 and will finally merge the highway and city stacks. So the highway stack is still, at this point, is pretty old. So often the issues people encounter are on the highway, but with 12.5, we finally merged the 2 stacks. I still find that most people actually don't know how good the system is. And I would encourage anyone to understand the system better to simply try it out and let the car drive you around. One of the things we're going to be doing just to make sure people actually understand the capabilities of the car is when delivering a new car and when picking up a car for service, to just show people how to use it and just drive them around the block.
We're not used to it. We're not used to it. That's why it's difficult. We're not used to it. But if you get used to it, basically the car is going to take you everywhere. Robotaxi, and then the car itself could drive you. I mean, imagine you could have somebody drive your own car. I mean, the car will be driven.
And as we increase the miles between intervention, we will transition from
Hello, Karen.
full self-driving to unsupervised full self-driving, and we can unlock massive potential in the fleet. We're postponed the sort of robotaxi or the sort of product
Robotaxi, that's the future. Let's see if that works.
by a couple months. Where it's shifted to 10/10, so the 10th of October. And this is because I wanted to make some important changes that I think would improve the vehicle, the sort of the robotaxi, the main thing that we're going to show, and we're also going to show off a couple of other things. So moving it back a few months allowed us to improve the robotaxi as well as add in a couple other things for.
I have to say, he's not the best speaker in the world, though. He's very hesitant, but he's a smart guy.
We're also nearing completion of the south expansion of Giga Texas, which will house our largest training cluster to date. This will be an incremental 50,000 H100s plus 20,000 of our quadrant 4 or
That's good.
AI5 Tesla AI computer. With Optimus, Optimus is already performing tasks in our factory.
So the thing is, do you think that the robo-taxi is going to work, right? At some point when we said to people, hey, look, we're going to have, you don't need a taxi anymore. You go on this app called Uber in the car, and this guy is going to come over and pick you up wherever you are at the airport. And the taxi is cheaper. It's a great deal. Nobody thought it would work because you would say, well, I got to go for a taxi. I don't know this guy coming or this woman picking me up. It's the same thing with a robo-taxi. If you have a Tesla, like I do, they'll go and pick up the car. The car will just go and pick up the person.
Outside customers, that'll be production version 2 of Optimus. For the energy business, this is growing faster than anything else. We're really demand constrained rather than production constrained. So we're ramping up production in our U.S. factory, as well as building the mega factory in China that should roughly double our output. Maybe more than double our output, maybe triple potentially. So in conclusion, we're super excited about the progress across the board. We're changing the energy system, how people move around, how people approach the economy. The undertaking is massive, but I think the future is incredibly bright. I really just can't emphasize just the importance of autonomy for the vehicle side and for Optimus.
Okay, so it looks like we're going autonomy here.
Sound crazy. I think Tesla producing app volume with unsupervised MSD, essentially enabling the fleet to operate like a giant autonomous fleet, and it takes the valuation, I think, to some pretty crazy number. ARK Invest thinks on the order of $5 trillion. I think they're probably not wrong.
$5 trillion valuation expected on Tesla. Keep in mind that Nvidia is 3 trillion. So these guys expecting 5 trillion.
Exciting years in.
I like the stock. I mean, they're doing a lot of.
Has operating marks as well.
As Elon mentioned, the Tesla team rose to the occasion yet again and delivered on all fronts with some notable records. In addition to those records, we saw our automotive deliveries go sequentially. I would like to thank the entire Tesla team for their efforts in delivering a great quarter. On the auto business front, affordability remains a top of mind for customers, and in response, in Q2, we offered attractive financing options to offset sustained high interest rates.
So my thought on this is this: Tesla stock has been suffering, but it's been recovering. It was up 5% yesterday in one day. You could always look at the option for Tesla, which is always good. I mean, the options for expiring in a couple of days went up 100% in one day, while the stock went up 5%. Keep that in mind for a change.
On net, our auto margins remain flat sequentially. It is important to note that the demand for regulatory credits is dependent on other OEMs' plans
Keep in
for the
mind,
kind of vehicles they're manufacturing and selling, as well as changes in regulations. We pride ourselves to be the company with the most American-made cars and are continuing our journey to further localize our supply chain, not just in the US, but in Europe and China, as well for the respective factories. As always, our focus is on providing the most compelling products at a reasonable price. We have stepped up our efforts to provide more trims that have estimated range of more than 300 miles on a single charge. We believe this, along with the expansion of our supercharging network, is the right
you need more than 300 miles, because when they say 300, it's not really 300. It's like 250, 280. And during the winter time, I know this is a Tesla. I mean, and during the winter time, unfortunately, it doesn't. You lose even more power.
Cost per vehicle declined sequentially when we remove the impact of Cybertruck. While we are experiencing material costs trending down, note that there is latency on the cost side, and such reductions would show up in the P&L when the vehicles built with these materials get delivered. Additionally, as we get into the second half of the year, it is important to note that we are still ramping Cybertruck and Model 3 and are also getting impacted by varying amounts of tariffs on both raw materials and finished goods. While our teams are working feverishly to offset these, unfortunately, it may have an impact on the cost in the near term. We previously talked about the potential of the energy business and now feel excited that the foundation that was laid over time is bearing the expected results. Energy storage deployments more than doubled, with contribution not just from Megapack but also Powerwall, resulting in record revenues and profit for the energy business. An energy storage backlog is strong. As discussed before, deployments will fluctuate from period to period, with some quarters seeing large increases and others seeing a decline. Recognition of storage gigawatt hours is dependent on a variety of factors, including logistics timing, as we send units from a single factory to markets across the world, customer readiness, and in case of EPC projects or construction activities. Moving on to the other parts of the business, service and other gross profits also improved sequentially from the improvement in service utilization and growth in our collision repair business. The impact of our recent reorg is reflected in restructuring and other on the income statement. Just to level set, this was about $622 million of charge which got recorded in the period. And I want people to remember that we've called it out separately on the financials. Sequentially, our operating expenses, excluding such charges, reduced despite an increase in spend for AI-related activities and higher legal and other costs. On the CapEx front, while we saw a sequential decline in Q2, we still expect the year to be over $10 billion in CapEx as we increase our spend to bring a 50K GPU cluster online. This new cluster will immensely increase our capabilities to scale FSD and other AI initiatives. We reverted to positive free cash flow of $1.3 billion in Q2. This was despite restructuring payments